Welcome to AGORACOM Talks, your weekly go-to source for the best small-cap headlines for over 65 million investors since 2007. We are coming at you fast today with a breaking news, rapid-fire analysis of 5 explosive small-cap press releases.
Yeah, we've got a lot of ground to cover.
Right. And the mission for this deep dive is simple. We want to equip you with the hard financial data and, those drill-down metrics you need to drive your own investment research.
Because, what do a Quebec graphite mine, an AI customer service platform, and a commercial drone fleet actually have in common?
Well, they're all crossing that brutal chasm from burning cash to, generating massive real-world revenue.
Exactly. So let's get right into the physical wealth, starting with resource extraction.
Up first is Lafleur Minerals, traded on the CSE under the symbol LFLR.
Right. So the headline, Crossing the Wire, focuses on them charting a path to gold production with a major study filing.
And the financial results here are just staggering. They're showing a 65% internal rate of return and a $101 million Canadian net present value.
Which is wild because to put that 65% into context, a typical mining project is absolutely thrilled to hit just a 20% return.
Oh, wow. Yeah.
Right. What's driving this is the margin. They're pointing out a sustaining cost of $1,569 US per ounce. Compare that against their base case of $2,750 gold, and you really see the profitability engine.
Yeah, and CEO Paul Tenier actually stated the study validates their, quote, vertically integrated strategy.
Exactly, by basically combining their Swanson gold deposit with their fully permitted Beacon gold mill.
Which, it's like buying a fully furnished permitted factory instead of building one from scratch.
Precisely. It skips so much bureaucratic red tape. Now, while Lafleur is pulling traditional gold from the ground, Lomico Metals is going after the new gold of battery metals.
Right. They trade on the TSX venture, symbol LMR.
Yeah, and their new headline regards a landmark Quebec graphite feasibility study,
which projects an incredible $4.7 billion Canadian in lifetime revenue.
And a 30.3% pre-tax IRR. Plus, they just secured an $8.35 million U.S. grant from the U.S. Defense Production Act.
That is massive government backing.
It really is. CEO Gordana Slepchev noted this project is a, quote, large economic driver in southern Quebec.
Meaning the governments are actively stepping in to de-risk these massive infrastructure costs.
Exactly. But shifting from physical resources to navigating physical airspace, let's look at Draganfly.
Symbol DPRO.
Yeah, I've got a headline on record revenue and a $90 million cash war chest.
I saw that. Zeroing in on the numbers, they hit $7.7 million Canadian in revenue, which is up 17.8%, and product sales jumped 28%.
It's massive top-line growth.
But wait, hold on, though. If they're, selling 28% more product, how on earth are they reporting a $22.9 million net loss at the exact same time?
I know that loss sounds terrifying at first glance, but you have to look at the mechanism. A huge chunk of that is non-cash depreciation and heavy R&D.
Oh, okay. So it's an investment.
Yeah, management's quote says it perfectly. That cash position ensures they capitalize on, quote, the rapidly expanding drone solutions market.
So that $90 million is just a shield that lets them weather the R&D burn.
Spot on. Now, transitioning to software automation, let's look at predictive AI on the CSE, symbol PAI.
Okay, what's their story?
Their breaking headline announces rolling out CloudRep.ai across 5 major industries.
Nice, and they're highlighting targeted revenue models of $100 to $1,000 Canadian for their monthly package.
All right.
But does this actually make human call centers obsolete overnight?
Well, CEO Suman Pushparaja highlighted that CloudRep is billed as a, quote, unified multi-agent platform. So it does the work of multiple departments simultaneously for a fraction of the cost.
It's totally rewriting the rules. So shifting into securing digital infrastructure, let's look at NextTech3D.ai on the CSE, symbol NTAR.
Yeah, their headline claims they're bringing blockchain ticketing mainstream via Apple Pay and Google Pay to capture a $50 billion market.
Wow, $50 billion.
Yeah, and CEO Evan Gappelberg says this is entirely about achieving, quote, real-world adoption. But wait, can they genuinely disrupt the entrenched ticketing monopolies with just a frictionless wallet?
Look, it's definitely an uphill battle. But by making the blockchain completely invisible, they remove the biggest friction point. You get all the protection without needing to know what a blockchain even is.
That is brilliant.
Yeah, and really, to summarize the core theme today, all 5 of these companies are crossing that critical chasm from conceptual development to actual commercial revenue-generating reality.
They really are. So what does this all mean for you? As these advanced technologies, from AI agents to blockchain wallets, become completely invisible to the end user, will the most dominant microcap tech investments of tomorrow be the ones whose products we use without even knowing it?